Hi, it's Anne here. Today I'm going to show you a spreadsheet I built to assess the financial viability of a new business idea or a new product or service line for an existing business. You open the spreadsheet in Excel and you can see down the bottom there's two tabs, one for products and one for services. So depending on what you sell, select the appropriate tab. Today I'm going to complete the spreadsheet for selling a product. Now, across the top here, you can see you can sell up to 5 individual products. If you have more products than that, you can't do them in this spreadsheet. In this case, I'm just going to have one product. So to start with, you need the selling price of your product or your proposed product. And I'm going to say that my product will sell for $100 each. So that's just for one. Now I have to calculate the cost of providing that one product. So it could be the purchase price if I buy it and then resell it, or it could be the cost of materials if I make it. I'm going to say minus $45. We enter costs as negatives in this spreadsheet. Minus $45 is the purchase price of my product. Then I'm going to spend minus $1 on packaging and minus $4 on shipping or delivery costs. Now, from this, the spreadsheet has calculated my gross profit on one sale is $50. The next line asks me the estimated number of each product sold in 1 year. Now, you can put anything you like in here because we're going to play with these numbers afterwards. This spreadsheet is designed so that it's easy and you can play with your numbers until you see, some viability in your business. So I'm going to assume that I can easily sell 250 products a year. If I do, that'll give me a gross profit of $12,500. So that does not include my time and it does not include my overhead costs, but it's a good start. Now we move down to the next yellow cell, the number of direct owner hours to deliver one product. This is always going to be a guesstimate. If you're selling a lot of products, you're doing multiple things at once. That's fine. Just estimate how much direct time it takes you to sell one product. And I'm going to assume 1 hour. Going down to the next yellow cell, it asks us to input the total annual operating costs of the business. So your operating costs are your overhead or your administrative costs. These are the costs that don't really change in relation to how many products you sell. Over a wide range of products, it will. Like there's a big difference in operating costs if you sell 10 products to if you sell 1 million. But, quite often they're fairly static within a reasonable range of the number of products that you're going to sell. So I'm going to add up all my estimated operating costs. So accounting and bookkeeping fees, website, hosting, all the apps that I pay for and all the software that I pay for monthly, any rent, utilities, my advertising costs, my insurance, all of those, and I'm going to estimate minus $10,000 as being my average expected operating costs. So subtracting that from the $12,500 gross profit for 1 year, we now have a net profit for the year estimated at $2,500. So that's not a lot of money, but as you're going to see in a minute, I'm not working very hard to make that money. Now, in the next box, enter your average weekly hours spent on business development. So marketing, sales, back office. Back office is your accounting and your bookkeeping, maintaining your website if you do that yourself. All of the things that you do in your business that are not directly connected to making a sale. And I've asked you to put those in for just 1 week because it's a little bit easier to estimate. And in my case, I'm saying I spend 10 hours a week on my business. And based on a 50-week year, the spreadsheet estimates 500 annual business development hours for me. Next, it's calculated for us the total owner hours worked annually. So that is the 500 business development hours plus 250 hours for the 250 products that we sold. So that's 750 hours a year. I'm working in the business, which comes out, again, based on a 50-week year, at 15 hours a week. So I'm only working 15 hours a week to earn $2,500. And you might think that's not too bad, but the next thing the spreadsheet does is it calculates it as an hourly rate. And the hourly rate I'm getting for my 15 hours a week labour is $3.33 per hour. So that's not really a business, is it? That's a hobby, if anything. It's pretty close to break even. It's not doing anything there. So instantly I know there is something wrong with my business idea. Now, it could be the idea is not viable, or it could just mean that I need to think about my numbers. So first of all, let's start with the number of products I think I'm going to sell in a year. Is 250 all I'm going to do? Let's change it to 500 and see what happens. So instantly you can see my profit has increased to $15,000 a year and my hourly rate has gone up to $15 an hour. So this assumes I'm not spending any longer on business development and my annual operating costs don't go up as a result. If they do, you have to adjust them too. But they shouldn't change too much. Maybe your marketing will go up a little bit, but if you've put in a decent estimate with a nice round number and a bit of buffer in it, you should be fine. What about my selling price? Can I sell my product for more? Now, this is a question that you have to be able to ask yourself. But let's consider that I can. I increase my price to $120. And now I'm making $25,000 a year and I'm getting an hourly rate for my labour of $25 an hour. So we're now into the realms of having a business that could work. So this is what you do, and this is how I evaluate the viability of a new business idea. I hope it helps you. Have a play with the numbers for your business and see how you go. If you've got any questions or comments, there's a comment box below, or you're welcome to send me an email.